This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world.
We are back, and not just back. We're living in an era where the anti-crypto army is in full retreat. SEC Chair Gary Gensler, as good as gone, the world turned upside down. The cherry on top? The newly elected president is a DeFi founder who once made headlines for buying hamburgers with Bitcoin. If that doesn't scream, anything is possible, I don't know what does. But amidst this tidal wave of pro-crypto policies, one concept towers above them all: a federal Bitcoin reserve. That's right, the kind of institution that sounds more like crypto folklore than reality. But will it ever happen? What would its purpose be? And more importantly, what would it mean for the rest of us? Stick around and we'll unpack it all. To understand the significance of a federal Bitcoin reserve, we need a little history lesson. Governments and rulers have always been obsessed with treasure. Why? Because treasure equals power. In the past, gold was the ultimate treasure. Its scarcity, durability, and universal value made it the go-to asset for consolidating power, funding wars, and stabilizing national currencies. Back in the day, commercial banks issued their own paper money, redeemable for gold. However, as economies expanded and interconnected, governments centralized the system, creating central banks to regulate money supply and public debt. These central banks became the gatekeepers of national reserves, holding gold to back their paper currency. Then came the Great Depression, and the world's faith in banks and gold was shaken to its core. The U.S. government took drastic action as bank runs threatened to deplete national gold reserves. In 1933, private ownership of gold was outlawed for investment purposes. Citizens were forced to surrender their gold to the government, effectively ending the domestic gold standard. This move centralized gold under the U.S. Treasury, which then revalued gold, boosting the monetary base without acquiring more of the metal. Fast forward to the Bretton Woods Agreement after World War II, and the U.S. dollar became the world's reserve currency, pegged to gold at $35 per ounce. But the system wasn't built to last. By the 1970s, global distrust in the dollar's gold backing led to a depletion of U.S. gold reserves. In response, President Nixon severed the dollar's tie to gold in 1971, birthing the fiat currency system we use today. Governments could now print money at will with no gold to back it. Fast forward to 2024. Gold now accounts for a mere 4.5% of the U.S. Treasury's reserve assets, valued at $11 billion. The bulk of reserves are held in special drawing rights and international credit issued by the International Monetary Fund. Unlike gold, SDRs are intangible. They're essentially IOUs whose value depends on a basket of major currencies. But this system is far from foolproof. Geopolitical tensions, wars, climate crises, and the ballooning U.S. debt make the future of fiat and SDRs uncertain. Bitcoin is often called digital gold, but it's so much more. Unlike gold, Bitcoin is infinitely divisible, easily transferable, and not confined by borders or physicality. It thrives during economic turmoil, often recovering faster than traditional assets after market shocks. Unlike gold, which largely sits idle, Bitcoin's value continues to appreciate in the long term. It's decentralized, immune to manipulation by any single government, and offers unparalleled liquidity. For these reasons, many argue that Bitcoin could surpass gold as the ultimate hedge against inflation and economic instability. So why would a government consider holding Bitcoin? For the same reasons they've hoarded gold for centuries: power, stability, and influence. Bitcoin offers a hedge against the risks of fiat currency and traditional reserves like SDRs. In an era where trust in fiat systems is waning, Bitcoin provides a decentralized alternative that central authorities can't manipulate. Moreover, Bitcoin's finite supply makes it an attractive store of value. Unlike fiat, which can be printed endlessly, only 21 million Bitcoins will ever exist. This scarcity mirrors gold, making it a compelling asset for governments looking to diversify their reserves. Of course, the idea of a federal Bitcoin reserve isn't without its challenges. Critics argue that Bitcoin's volatility makes it unsuitable for reserve purposes. A sudden price crash could wreak havoc on a nation's financial stability. There's also the issue of security. Unlike gold, Bitcoin exists in the digital realm, making it vulnerable to hacking and cyber attacks. A government managing billions in Bitcoin would need ironclad security measures to prevent theft or loss. Finally, there's the ideological clash. Bitcoin was designed to operate outside government control. The idea of centralizing it under a federal reserve might feel like a betrayal of its founding principles. If the US or any other country were to establish a federal Bitcoin reserve, how would it work? The reserve could operate similarly to a sovereign wealth fund, with Bitcoin holdings managed by a specialized government agency. This agency could use Bitcoin to diversify national reserves, hedge against inflation, and even generate revenue through staking or lending programs. In the long term, such a reserve could strengthen a nation's economic resilience and solidify its position in the global financial landscape. If governments start accumulating Bitcoin, it would likely trigger a massive bull run, pushing prices to unprecedented heights. But the implications go beyond the price of BTC. Government adoption of Bitcoin would legitimize it as a global asset, paving the way for mainstream acceptance. It could also accelerate the development of Bitcoin infrastructure, making it easier for everyday users to buy, sell, and use crypto. However, there's a flip side. Increased government involvement could lead to tighter regulations, potentially stifling the decentralized ethos of the crypto community. The idea of a federal Bitcoin reserve may seem far-fetched, but so did the concept of Bitcoin itself just 15 years ago. In a world where trust in traditional systems is eroding, Bitcoin offers a glimmer of hope, a decentralized, transparent, and finite asset that could redefine the very concept of money. Will we see a federal Bitcoin reserve in our lifetime? Only time will tell. But one thing is certain, the world of finance is changing, and Bitcoin is at the forefront of that revolution. What do you think? Would a federal Bitcoin reserve be a game changer or a disaster waiting to happen? Let us know in the comments below.